Ladies and gentlemen, it's a pleasure to be here with you tonight. I am Bryan Ellis, publisher of accredited IQ magazine and Self-Directed Investor magazine and Self-Directed Investor Talk podcast. And I'm here with you this evening because your very own Lori Greymont asked me to take a close look at her new vision for the assisted living industry in the form of a project called San Carlos Commons, which is a unique and arguably exciting new definition of mixed-use property that's unlike anything you've ever seen before. So in the next 35, 40 minutes or so, I'll tell you what it looks like from my vantage point as someone who does a whole lot of this stuff. And as I looked into this project, I found a number of really quite distinct factors about this opportunity that can be reasonably described as extraordinary. A quick sample of just three of the many extraordinary facts are these. Extraordinary fact number one is the truly exceptional financial potential. As soon you'll see, you'll likely do much better as an investor in San Carlos Commons than if you'd been invested with the venerable Warren Buffett for the last 20 years or so. Now, no need to trust me on this. I'll quantify it shortly. Extraordinary fact number two is this project isn't just financially attractive. It's socially attractive as well. Caring for our senior population, and that's what this is. It's about assisted living. Caring for our senior population isn't just an obligation. It's an opportunity to itself, an opportunity to have your capital connected to truly important purpose. And extraordinary fact number three, San Carlos offers something rather unique, and that would be public esteem. Upon completion, this beautiful facility will stand as a very public and present reminder to you and those you know of your commitment to the local area, and to the senior citizens of the area and to the community at large. And rarely will you find such strong financial opportunity that is directly coupled with the potential for genuine public esteem. So San Carlos really appears to offer just that. Now, as I said, my name is Bryan Ellis, and I'm here just as a guide to introduce you to the San Carlos Commons project. You can find my work published in Forbes, TheStreet.com, Entrepreneur, and many others. I also have taught tax law through the University of California and am a regular featured speaker at investment strategy conferences all over the world. Most substantially of all, I am publisher of accredited IQ magazine, a publication that exists to exclusively serve the alternative investment needs of high net worth individuals. And as such, I've been involved in literally dozens of large capital projects like the one we'll discuss tonight. And it is, incidentally, my sense that this one really has the potential to be special. Now, in the interest of perfect clarity, you need to know I'm not a member of the management team of the San Carlos project. Lori hired me just to make sure that she was able to very capably communicate the potential of the San Carlos Commons project. And in working with her, I found the opportunity to be very interesting and really quite compelling. So now let's take a look at the broad strokes of the opportunity right after I share this very tedious legal notice with you, which is I, Bryan Ellis, am not licensed as an attorney, accountant, or CPA, nor do I hold any other professional licenses. And I'm not providing information to you on such a basis. I believe that the details of what I share with you this evening are correct, but I don't warrant either their correctness or completeness. Lori Greymont has reviewed this presentation in advance and has confirmed its factual accuracy and legal compliance to her satisfaction. And that's the authority on which I'm sharing this information with you. It is your responsibility to make independent decisions without regard to anything I say during this presentation. In this event that any portion of this presentation conflicts with any other authoritative source, including, but not limited to, the private placement documents for San Carlos Commons or any other documents or statements from Lori Greymont related to this project, then those resources shall be viewed as authoritative and superior to the content of this presentation. Seek your own licensed counsel who's qualified to make recommendations based on your own situation. Finally, I am not a principal in this project and am compensated in a work-for-hire manner. I will provide information which may appear to be either in favor of or opposed to your decision to participate in this project, or which may impact your level of urgency in choosing to participate, but I do so only in the interest of providing full relevant details for your consideration. And my intention, by the way, is solely to inform and educate you. I make no recommendations for or against your participation in this project, make no claim or representation of objectivity. Anybody who makes such a claim is somebody who doesn't understand the meaning of the word. Okay, now that we've made the lawyers happy, let's move on. In order to make sure we're all on the same page, I'm going to take the next 3 or 4 minutes and quickly go over why savvy investors broadly agree that the asset class of assisted living can reasonably be described as deeply attractive, a real cash producing machine. And even with favorable comparisons to other asset classes like stocks or even real estate. Then we'll take a detailed look at one specific assisted living project, a project known as San Carlos Commons, the Godzilla project, the opportunity on which we will focus this evening. You'll see how it works, what to expect, and exactly why I suspect a broad swath of savvy investors among you could find this project quite compelling. And then we'll wrap up with a word about qualifications to participate. Now, my instinct is that this is a strong opportunity, but it's not right for everybody. And during this final part of our time together, you'll discover whether it's right for you or not. Also, questions are good. If you have questions during this presentation, send them to this email address. It's support@sjrei.org, support@sjrei.org. Learn it, remember it, because it's gone now. And at the end of the presentation, we'll do a quick Q&A to make sure all of your questions have been completely answered. So very briefly, why assisted living? What's it all about? Well, assisted living facilities serve an incredibly important niche. Older Americans who are in need of assistance on a daily basis to live comfortably. Some of them are more independent than others. Some need only minimal assistance like meal prep or medication reminders, and others may have memory issues like Alzheimer's disease. They'll, of course, need a higher level of care. Regardless, the lives of these people, they're very important to themselves, of course, but important to their families and important to our society as a whole. And it turns out that the number of seniors who are of the age and health situation that requires or justifies the use of assisted living facilities, well, that number just keeps getting bigger. In fact, American Senior Communities tells us that from 2016 to 2030, the number of Americans living in a senior community will literally double from 1 million to 2 million people. Forbes goes even farther, citing the Administration for Community Living, who says that nearly 60% of seniors will need some form of long-term care. And Motley Fool real estate analyst Matt Frankel put an even clearer spin on it by saying senior living is a long-tailed growth market. There's no question about that. The 85 and older population, which is their bread and butter, is expected to roughly triple over the next 30 years. It's going to be a huge growth market. Now, I share that information with you, both for background and so you'll understand that where the assisted living industry is concerned, we're clearly in a rising tide sort of situation. And as we know, a rising tide lifts all boats, and that's a great thing. But we don't want just a strong, well-positioned industry. We need to demand a strong individual asset within a strong, well-positioned industry. And San Carlos Commons looks to be that. So we transition promptly to part 2 of tonight's presentation, which is the opportunity of San Carlos Commons specifically. Now, San Carlos is a new concept that is impressively fitting for our times and for the specific geographic locale, our own very backyard of San Jose, California. And upon completion, it's going to be situated on virtually an entire city block on West San Carlos Street, near the trendy and very desirable Santana Row area. Now, the concept is simple but fresh. San Carlos Commons will provide a tremendous new type of mixed-use real estate, but not like anything stipulated as mixed use that you've previously encountered. I'll describe this new mixed-use model to you in 2 parts. So the first part of the beautiful 7-story building design you see before you, it will be comprised of 209 high-quality assisted living apartments or rooms with state-of-the-art facilities that will serve a wide range of residents in need of living assistance, including a whopping 79 memory care units for Alzheimer's and other patients with specialized memory needs. For seniors in need of regular assistance with the daily demands of life, San Carlos Commons will provide exceptional quality and service to the San Jose and to the broader Silicon Valley area, along with a very strong quality of life for its residents. And in just a bit, I'll share more about the unique aspects of this portion of the San Carlos Commons project, including the pandemic-aware features that existing competitors do not offer, and which caused many of them to suffer mightily during the coronavirus pandemic, but actually represents tremendous opportunity for San Carlos. But first, let's consider the second part of this unique mixed-use concept, which is this: it's co-located independent living facilities. Now, that's just a fancy way of saying that just shy of half of San Carlos will be comprised of beautiful condominiums for residents who they really don't have any need for assisted living services. They're healthy and fully capable. What they want and what San Carlos will provide to them is something like cruise ship living on land. They'll be free from the hassle of preparing meals or doing laundry or performing maintenance. They'll even have a full menu of optional planned activities to keep their social calendars full. Now, these two distinct portions of San Carlos Commons, which we'll refer to respectively as assisted living and cruise ship living, how about that? They're obviously designed and intended for two radically different audiences, but why the mix of those two groups in one building? Granted, the building is designed such that the two populations won't cross paths with each other at all, but still, why do this if neither group's going to encounter the other? And I've got to be honest with you, it seemed strange to me at first. But as I studied the market dynamics and as Lori explained her vision to me for how this facility will bring value to the local area, it became really quite clear. She explained several use cases to me, all of which made good sense, and two of which I believe to be worthy of a brief bit of focus tonight. Use case number one is what I call the David Wu model, which I illustrate with this story about a friend named David Wu. It's not his real name or his photo, just to protect his identity, but this is the story of when David's father's health declined suddenly, such that assisted living arrangements became absolutely necessary. Now, culturally, David is extremely family-oriented, and he'd also been quite successful as a software engineer. So while he was absolutely willing and able to pay whatever financial price it took to make sure his father had all the care he needed, David was still deeply torn emotionally by what felt to him like he was abandoning his father if he put him in assisted living. David's a smart guy. He was clear that neither he nor his wife had the necessary medical skill to take care of his father. So his abandonment concern wasn't logical. It wasn't reasonable, but reasonable or not, it was very real to him. And it's for David Wu and people just like him that San Carlos Commons was created. Faced with the same scenario, San Carlos would give David another extraordinary option. He could just place Dad in the trustworthy hands of the assisted living team of San Carlos and simultaneously acquire a great condominium on the independent living side of the complex for himself and his wife. It'd be a best of all worlds kind of solution. David's father gets top quality care. David and his wife get to be located very close to their father, literally just a short walk away at virtually any time of the day or night. And to top it all off, David and his wife get to live in a highly desirable location, along with amenities they've never previously experienced at their home, like the provision of all of their meals, laundry service, housekeeping, planned activities, etc. It's just an extraordinary win-win scenario that, frankly, it just doesn't exist anywhere else. And I suspect that San Carlos Commons will find a tremendous demand for people like David Wu and others in this very, very common situation. Now, the second particularly attractive use case for San Carlos Commons is what Lori has described as aging in place. And I call it the Nora Fields model, another pseudonym I'm using to describe a family member of mine whose situation illustrates this particular use case quite well. Nora was in her late 50s when her husband died. So she was certainly not old by any stretch of the imagination. She remained healthy and vibrant, but she did have some reasonable and understandable anxiety related to living alone for the first time in decades. For Nora, San Carlos Commons would be perfect, but for an entirely different set of reasons than it would be great for David. You see, Nora could acquire a condo on the cruise ship living side of the property and live her life comfortably, well, and conveniently. Then if and only if her health situation ever demanded it, Nora could simply, easily, and very conveniently transition over to the assisted living side of the facility with nearly zero disruption to her life and no need to uproot herself and endure any of the tremendous difficulties associated with such a move. But if Nora remained healthy, or if she never chose to make such a transition, she never need do so. Nora would get absolute freedom and independence for as long as she wanted it, and then she could get more help if and only if the time came that she needed it. Now, as Lori described these scenarios to me, I was immediately struck by something. I was immediately struck that I know many people who fit both scenarios. And some of the other scenarios she described to me that we're not even going to talk tonight, discuss tonight. And as she did that, I realized that there's some really very common needs in the assisted living and the senior care world that are wholly unaddressed in the market today. But San Carlos Commons stands to change that situation. This strikes me, by the way, as very much the same type of ahead of the market thinking that clearly possessed Steve Jobs and the culture as a whole at Apple. You know, Jobs famously once said, some people say, give the customers what they want, but that's not my approach. Our job is to figure out what they're going to want before they do. I think Henry Ford once said, if I'd asked customers what they wanted, they would have told me a faster horse. People don't know what they want until you show it to them. You know, San Carlos strikes me very much as the same type of thing. Where others in the assisted living industry are focused primarily on building faster horses, San Carlos Commons seems to me to be very much poised as the type of community that will provide the model for upscale assisted living in the future. Because San Carlos Commons gives its residents, whether on the assisted living side or the cruise ship living side, something of inestimable value: the opportunity for real, ongoing community. And by the way, the opportunity for real, ongoing community involving their own family. Now, there are quite a few deeply attractive features and such of the design of the property itself. And all of those features are very well described in the project documentation that will be provided to qualified investors. But I'd like to focus on just one such feature, which is the intense focus on creating a facility that respects the potential for future pandemic outbreaks. My friends, that issue alone proved to be a death knell for some assisted living facilities during 2020 and even 2021, because they were all caught flat-footed by the pandemic. But not only won't that ever happen at San Carlos Commons, but the memory of that issue will, in all probability, serve as a tremendous competitive advantage. You might wonder how that could be. Well, sure, there are going to be substantial built-in physical security issues or physical security methods at San Carlos Commons, you know, particularly for the assisted living and memory care side of the project, so that there's never the risk that anybody, particularly infected people, can gain access to the building without passing a security checkpoint first. Sure, that's in place, but there's so much more. For example, in San Carlos Commons, each individual assisted living room will have, get this, it'll have separate HVAC and separate filtering facilities, so that an infection in one room will have precious little chance of spreading to a second room. Imagine the comfort of knowing that even if some person who is infected with the most aggressive virus imaginable, if that person's in their room, that virus simply won't spread beyond that space. Sure, that's a somewhat extravagant and maybe even high-end feature, but a feature with incredibly clear benefits. A feature that will lead to direct competitive advantages for San Carlos Commons. Now, again, Lori has a tremendous amount of information about the genuinely impressive features and amenities of this building, and she'll provide that information to you to review at your convenience. From where I sit, there's a lot to like about the features of the property and how they translate into clear benefits and competitive advantage for San Carlos. But because those properties feature details, those property feature details are available directly from Lori, and I know that she's happy to provide them to any qualified investor. What we're going to do now is kind of transition from the sizzle to the steak. and focus on the financial potential of this project. You know, what can you expect out of it? And really the story behind it all. So here's the story. As we've already seen, assisted living has a booming marketplace. That's undeniable, and it's true nationwide. But my friends, we're not considering a nationwide project here. We're looking at a project situated right in San Jose. And so sober-minded investors will insist on knowing two very fundamental facts. First, is there actual real, not imagined, but real quantifiable demand for the services to be provided by San Carlos Commons? And second, what are the realistic financial expectations that should happen when Lori's business plan is executed? Well, I have very specific answers for both of those questions right now, and I think you'll find them to be quite interesting. First, on the question of real demand for the kinds of services to be offered at San Carlos Commons, particularly the assisted living side of the project, consider this. Research firm Nielsen paints a rather rosy picture for the area. As they confirm that the San Jose statistical area is an area with increasing population and above average income, even versus, not even when compared to the rest of the country, even just compared to the state of California, the San Jose statistical area outpaces the whole state. This has been historically true, and it presently continues. San Jose is leading in virtually every demographic measure, including current population, projected population, current income, projected future income, and all of this reflects good, and I'd argue necessary conditions for considering an investment of this sort. But those statistics are, let's be honest, they're a little vague. But what is in no way vague and is intensely encouraging to a savvy investor is this statistic taken directly from the analysis, the market report on the San Carlos Commons project created by OHC Healthcare Property Advisors, an extremely highly regarded firm that provides objective and reliable appraisals and market studies to the senior housing and healthcare real estate industry. Here's the relevant quote. Local supply and demand, well, the fundamentals are undersupplied. The market is reporting average occupancy levels of 96.1% for assisted living and 95.6% for memory care. My friends, allow me to translate for you. Assisted living facilities are full. 96.1%, that's full occupancy. And that is an extraordinary and a promising reality. And it applies to the San Jose area specifically, not to the nation as a whole, or even to the state as a whole. That represents the reality on the ground in San Jose right now. As a matter of fact, that really impressive market report I mentioned by the team at OHC Healthcare Property Advisors, it does a really impressive job at considering and accounting for every imaginable source of competition for San Carlos Commons. You know, and this is good information to have. We appreciate this. But look at this. Look how much they actually include. First of all, they include 17 existing assisted living facilities already serving the San Jose area. They look at a substantial allowance for competitors not in the immediate area, but still in the kind of close enough range. They include home health care agencies in the competition analysis. They include informal healthcare providers. This demand analysis even factors in the rooms to be provided by the one and only other known assisted living project being constructed in the area in the next couple of years. So we're even factoring in known future competition. And despite including all of that competition in the analysis, the bottom line is this. Right now, the San Jose market has a huge net demand, a net shortage of 566 beds. And furthermore, that demand will grow by 19 beds a year. And even after including full occupancy for the one future competitor still to come, net demand will remain at a whopping 498 beds over the next 5 years. Now, this is to say, on a purely mathematical basis, the 209 beds to be offered by San Carlos Commons, they won't even meet half of the present and emerging demand. And it gets better still when you consider that Google has announced plans to build a huge downtown campus 2 miles away from San Carlos. Now, it's quite reasonable to project that this thing will bring a really substantial number of additional people to the area, many of whom will have parents in exactly the right age range for San Carlos Commons to serve. Honestly, this opportunity appears to go from great to greater with every additional look at the supply and demand dynamics. Now, my friends, from a pure supply and demand perspective, this is clearly an incredibly attractive scenario. I refuse to bore you with endless citations, so I'll tell you again that 100% of the supporting data for these conclusions is referenced in the OHC market report, and the original sourcing for all of that, the data used therein, comes from reputable places like the National Association for Home Care and Hospice, Hospital and Healthcare Compensation Service, the American Senior Housing Association, the U.S. Bureau of Labor Statistics, and of course, the U.S. Census Bureau. Now, as an aside, I, being one who has an academic background in computer science and engineering, I got to tell you, I find the data and the statistical rigor of the analysis in that report to be rather impressive. I'm confident that you will too when you review it. Now, here's the summation of this point. Demand is strong and growing. Supply is weak. And it all looks exactly right for what it needs to be for San Carlos. The OHC report describes this as an undersupply situation, but as an investor, you got to think that this is more of a tremendous opportunity situation, not just an undersupply situation. And with that, we move on from the supply and demand equation to the question of real financial potential, what we're all here for. My friends, the potential here is arguably huge. Just consider some of the base numbers. And as I do this part of the presentation, understand that I've done a lot of these projects. I've done a lot of raises like this. And it's really easy to shift the numbers so that they look better than they ought to. That's not what's going on. You're getting a good look at reality. So just consider some of these base numbers as of today, right now. Before any future inflationary impact, we expect some rather impressive income potential from San Carlos Commons, like monthly fees of $6,000 to $12,000 a month for assisted living patients, monthly fees of $8,000 to $18,000 a month for memory care patients. For those who choose to purchase a condo on the cruise ship living portion of San Carlos, they'll be able to do so for, in the range of $850,000 to $1.25 million, with additional monthly HOA and service fees of $3,000 to $4,000 a month. Now, obviously, these are eye-popping cash flow numbers. Remember, all that stuff's just for one room, and there's going to be 209 rooms plus a whole bunch of condos. Now, if you're otherwise unfamiliar with typical costs for assisted living, numbers like that could be shocking to you. However, those experienced with assisted living in general, and particularly with higher end services in the San Jose area, will find these rates to be unsurprising. Furthermore, OHC's detailed analysis of the financial capability of the potential residents in the area, it identifies two really favorable points. Listen to this. First, when you look at households with people age 75 or over, a whopping 21% of those households, they have sufficient income and assets to address the level of care they need at those prices. But that's the little news. The big news is that a whopping 63% of households between the age of 45 and 64, and by the way, that's the vast majority of them, 63% of those households appear to have sufficient income and access to sufficient assets to cover the cost of care required by their parents. So here's the bottom line. A well-operated assisted living community can be an absolute cash printing machine, driving the value of investors' equity to really lofty, attractive heights. And San Carlos Commons is situated in what may be the nation's very best locale for this growing, booming, and crucial industry. And what does that mean for you as an investor? Again, listen carefully. All of the pertinent details, all the spreadsheets, all of the data, it's all available to you in the private placement memorandum. And I'll tell you how to get that momentarily. But the point of our time together is not to dive into all of the details, but to make sure that you get the big picture. And you should, by all means, review those documents in detail. The picture just gets better when you do. But for purposes of summary, Lori Greymont projects that investors in this project will likely enjoy an annualized return on investment of 23% per year, culminating in as little as two years from now. There's even a highly probable scenario in which the projection rises to a whopping 30% per year. But for the sake of clarity and being conservative, we'll focus on this 23% number. Now, let's be very clear, folks. Nobody can predict the future. That includes Lori. The actual results could be better and could be worse. And this projection is just that. It's a projection and not a guarantee. But when you see the data for yourself, you'll see it's a projection based on good fundamentals and good assumptions. Now, to understand the gravity of that return, consider this. If back on January 1st of 2000, a bit over 22 years ago now, you had invested your portfolio in such a way as to achieve, listen to me, if you had achieved an identical return for your portfolio as was achieved by the share price appreciation of Warren Buffett's Berkshire Hathaway, you have any idea what you'd have achieved as an ROI? Maybe 20%. He's the greatest of all time. Maybe 17, maybe 15. Nope. As of earlier today, that return would be 10.51%. 10.51%. Not 15, not 17, and certainly not 23. This is why the potential with San Carlos Commons is so incredibly attractive, particularly for any of you who may not have always been in the right place at the right time with your portfolio over the last 4 years. San Carlos Commons represents a very real, very impactful way for you to potentially catch up if you need to, or even get way, way ahead in your portfolio. Now, to be clear, no investment is without risk. That includes this one, for sure. You absolutely must review all of the details of this project as represented in the PPM in order to determine objectively for yourself whether San Carlos Commons is a good fit for you. What I can say is that the data I've shared with you is, to my eye, really quite positive. Furthermore, there's even more data in the PPM and in the OHC analysis that I haven't shared with you, which that data only serves to bolster the case as well. So the questions of supply and demand are addressed. The question of income potential is addressed. But one huge question remains, and that is, who exactly will be steering the ship on this project? And that's where Lori Greymont has, I think, shown some genuine market cunning and a very good level of self-awareness. You see, Lori, she is a real estate expert. None of us can reasonably question that. With dozens and dozens and dozens of investors that she's successfully served in the past, she knows how the real estate game is played. We all know that. But Lori also admits that she herself is not an expert in developing or running assisted living facilities. She readily admits that. And in addressing that weakness, she's created an opportunity that not only plays into her particular area of demonstrable expertise, but also creates a very real potential for a huge exit pop for all investors in this project, potentially including you. You see, what Lori plans to do is to complete the entitlement of the land for this project. The same land you saw at the beginning, and it's nearly an entire city block located on West San Carlos. And then following that entitlement, she will sell the entitled property to a developer in exchange for cash and a substantial piece of the ultimate cash producing enterprise of San Carlos Commons. Now, as any of you involved in California real estate already know, the entitlement process can be a real bear. And that might be saying it nicely. It's pretty common that that process can require years of painstaking work. And there's simply no way to avoid it. But fortunately for you, Lori is not at the front end of this process. In fact, she's been working at this for 3 years already and is so far along as to confidently project that entitlement will be complete by May of 2024, maybe even as soon as May of 2023. And that's just a year away. Sure, there are many curveballs that can materialize in the entitlement process, but this isn't Lori's first rodeo. In fact, one of the things she's done, which you more experienced investors will instantly recognize as being particularly wise, is that she proactively acquired an environmental impact report to demonstrate in advance the clear lack of negative environmental impact brought by this project to the local area. And the brilliance of this plan, to my way of thinking, is this. Look, you may or may not know this. You got to be kind of involved in a different sort of project for this to be as obvious. But it's a well-known reality among people who do what I do, at least, that commercial development has changed radically since the real estate collapse of 2007. Back then, developers wanted to run the whole process. They wanted to find the land. They wanted to do feasibility studies. They wanted to do entitlement. They wanted to do construction. Sometimes they even wanted to do operations. Now, things are very different. Developers generally only get involved in projects where land selection, feasibility studies, and entitlement have already been fully or almost fully completed. So you see, that's exactly what Lori is serving up to the market. Listen to this. She's serving up a prime piece of land in a prime location where there's proven and overwhelming demand among people with a well above average income and financial capabilities. And they're all going to be served well by an extraordinarily high cash flow business, which is San Carlos Commons. I mean, you've got to ask yourself, what do developers know about this industry that maybe you don't yet know? Well, they know the things I told you at the very start of our time together this evening. They know that between 2016 and 2030, the number of Americans living in senior housing communities will double from 1 to 2 million. They know that senior living is a long-tailed growth market. There's no question. It's going to be a huge growth market. They know that nearly 60% of seniors will need some sort of long-term care. And they know what you and I have well established, that San Jose in particular is very arguably the right place. And this is the right time. And so with that, we proceed on to the third and final part of our time together, a discussion of the qualifications for participation in this project. Now, the requirements for participation in this project are simple, and they are 3. First, you must be an accredited investor. If you're not familiar with that standard, or if you're unsure of your status, just schedule an appointment to chat with Lori and ask her about it when you speak. Second, investors seeking to place a minimum of $250,000 will be given top priority, but not just priority. They'll also receive a tremendous financial incentive for doing so. I'll tell you about that rather juicy incentive momentarily. Third and finally, in the interest of maintaining access for more investors to participate, investment capital beyond $1 million will not be accepted from any single investor. Now, if you meet or you suspect that you meet each of those standards, then your next step is to visit the web address you see at the bottom of your screen and to schedule an appointment to speak with Lori right away. Now, please note, the total project budget here is $19 million. And one of Lori's options is to go ahead and raise that entire amount, which is eminently feasible, given the quality of this project, just eminently feasible. But there are two other factors which could dramatically reduce the amount of capital that she actually needs to raise. And therefore, that will reduce the number of investors who could be accepted. The first factor is that Lori's built the project such that she does have the option to fund about 2/3 of it using debt. That would bring the cash requirement down to about $6.5 million. And second, an existing group of investors with whom Lori has a relationship, they have an existing right of first refusal to this project in the amount of $3 million, the exercise of which could bring the capital demand down to a total of only $3.5 million. Now, I tell you all of this for one simple reason. At an investment average of $250,000 per investor, Lori will need as few as 14 people, to fund the $3.5 million option. And the very real and very true fact is this: something on the order of about 14 times that number of people registered to be on this call. There are many orders of magnitude more than that number of people on this call right now. And so I think it's reasonable to say that if you are inclined to participate, time is of the essence for you. Now, the way to do that is as follows. Step number one is you visit the URL that you see below. When you do, you will see a screen that allows you to pick a date and a time to talk with Lori about your investment in this project. And so step number two is actually pick a date and time. Given the scarcity of openings for investors that you'll understand better as we talk about it, I recommend that you choose the nearest possible date and the nearest possible time to speak with Lori. Now, when you arrange or when you speak with her, what she's going to do is just make sure that San Carlos is a good fit for you and vice versa. And if so, she'll arrange to send you the private placement memorandum and associated documentation. And remember what I said earlier, I strongly recommend that you request that she also sends you a copy of the report from OHC Healthcare Property Advisors, the report that's about San Carlos Commons. That is an impressive piece of work that I suspect you can tell. It really made a very strong impression on me. And OHC has zero financial or other interest in this project. So to the extent that anybody can be objective, there's a good argument that they could be. Now, you'll also have one more decision to make whenever you speak with Lori, and that is, do you want to attend an in-person information session about the San Carlos Commons project? If you qualify to participate in this project, Lori will extend an invitation for you to attend. It's going to be roughly a 4-hour-long session on an upcoming Saturday, where you can not only see the property in the surrounding area, but you'll have plenty of opportunities to ask questions. And last I heard, there may even be a member of the city council or the San Jose Planning Department on hand, so that you can get a sense of the strong relationship that Lori has forged with these very important people. You'll also be treated to a nice lunch as part of the experience. It'll be a nice experience for you. When you speak with Lori, she'll give you the date and full details for that information session. I suspect you'll find that particular meeting to be very illuminating. So that's the process. And my suggestion to you is this: since we have good reason to anticipate strong demand, then as soon as you decide to participate in San Carlos Commons, go ahead and notify Lori immediately, even if it's before the special information session to be held on an upcoming Saturday. That way, when you invest at least 250 grand or more, you're going to be providing yourself with assurance that you will, in fact, be able to participate in this project. Because like I said, the real ultimate amount of money that Lori must raise for this project could be as little as $3.5 million, and that's going to go quickly. Now, we'll do a quick Q&A in just a moment, but first, a comment about the rather substantial, and I do mean substantial, financial incentive that Lori is offering for investments at $250,000 or above. Here's the idea. This project is structured so that passive investors, that's you, so that passive investors get your share of a whopping 40% of this project. Now, that is a substantial amount of a project of this type. It is not particularly uncommon for development projects, particularly high yielding projects, as we expect this one to be, to cap out at an equity split of under, anywhere near 20 or 25% or over. Like, that just doesn't happen much. I'm involved in another couple projects right now where we're not doing anything near that much. So 40% of the project is arguably a very generous profit split to start with. But for those of you who invest at $250,000 plus, Lori has established a huge bonus pool of an additional 20% of the project, which you $250,000 plus investors will get to share. In other words, for those of you investing at $250,000 plus, then in essence, you folks will be receiving your share of a whopping 60% of this project. And if the clearly attractive features of this project weren't already enough to tip a savvy investor over to choosing to participate, I suspect that the tremendous bonus pool offer will get your attention. And that is why, again, I respectfully encourage you to visit the URL you see on your screen right now. And just go ahead and set up a time, an appointment to speak with Lori right away, tonight even, if there are any such appointments. I don't know, but if there are, take them. Now, my friends, I thank you for joining us tonight. I'll take this opportunity to quickly answer a few questions that have been sent in during the course of our time together. I note that if you sent in questions, and if I do not answer it for some reason right now, by all means, don't fret. I will absolutely make sure that Lori sees your questions and that she gets back to you by email. Fair enough? All right, so here's the one that's come in most. What size of investment do you require? Again, $250,000 is the level at which we are providing tremendous incentives. So if that works for you, or if you need to discuss it with Lori, go ahead and reach out by setting up an appointment at the URL you see at the bottom of the screen. Now, the next question is, why are there so few spots for investors to participate? This person was wondering why there are only 14 spots, and it could be that few. The reason that there is an inherently limited number of spots, just think about this, ladies and gentlemen. If we raise the entire $19 million, that's, I don't know, that's 60 or 70 people. That's not a lot of people. So the fact is that this is a project that has a set budget. We're not trying to raise an unlimited amount of money. I say we, I am merely telling you what Lori is trying to do here. I mean, she's not trying to raise an unlimited amount of money. And once she has the amount of money she needs, she's going to stop raising. That's why there's a limited amount of space. And since she structured this project in such a way that she has a number of options for how much money she actually wants to raise. It could be as much as 19 million, which I think is entirely plausible. Could be as little as 3.5 million. And in that latter case, that's only 14 investors at $250,000 per. It could even be fewer than that, because invariably there are a few investors who put in a larger amount of money. So I bring that up just so that you understand that there is a strictly limited amount of capacity. All right. Next question: what amount of return is guaranteed to me? Oh, this is a good question. The answer is no amount of return is guaranteed to you. This is not a certificate of deposit. This is not something that's government guaranteed, and no investment can guarantee a return. This one certainly doesn't either. The projections that were made earlier are just that, they're projections. I think there's a decent chance they end up being wrong in your favor, but they could be wrong against you. That's how all investing works. That's why it's so important that you take this opportunity seriously, read the documents, look at the rationale and all of the reasons for making those projections, and make a decision for yourself. All right? Can I invest in San Carlos Commons in the future? Well, no. I suspect that this is not going to take us very long to get this project all funded. And so if you are, like, for example, interested in investing next year, nope, not a chance. This is a good one. Tell me more about the introductory event that you mentioned. So what's going to happen? and Lori will give you the specific date for this, but on some upcoming Saturday, she has a really cool event, and I'm going to try to get out there to participate in it myself. But this is she's got a 4-hour event planned where she's essentially going to take you to the property, so you see exactly where we're talking about. She's going to give you the chance to see the local area, and she's going to point out some of the specific reasons that the local area is really incredibly well suited for this particular project. She's going to take you to a very nice lunch, and of course, all of this is going to be done with full social distancing in mind, and so you can be you can rest assured in that way as well. But the bottom line is that's going to be an opportunity to actually talk it through with Lori and with other folks as well, and really dig in and really see and understand the details of this project. And you don't quote me on it. I mentioned it earlier. Last I heard, there was a possibility that a city council or planning department person might be there. Don't hold Lori to that. That's something that's in the back of my mind that I think is true, but I'm not certain. But ask her about that, because that's something that you will absolutely want to take part in. And the idea is simple. Where tonight we have done an overview, and I've given you the big picture and summarized all of the important stuff. There you can go deep. You can really see what's behind the curtains and achieve whatever level of comfort that you need in deciding either to or not to participate in this project. And that's what we want from you. I mean, like, if you are not a good fit for this project, we don't want your money involved. That's nothing personal. Same reason you won't want your money involved if you're not comfortable. And that's what the introductory event is all about. I really strongly encourage you to try to attend that event, and it won't cost you anything. But Lori will tell you all about that whenever you speak to her. And the way that you get set up for that is just go to the URL at the bottom of the screen and set an appointment to talk with her, and the two of you can work that out. All right. I think there's another one. How can I get answers to questions about San Carlos Commons? That one's easy, and I bet you know it by heart by now. Go to the URL at the bottom of the screen and set an appointment with Lori, and she'll be happy to help you with any questions you have. How much money are you raising for San Carlos Commons? That's a good one. As I mentioned, the project budget overall is $19 million. We're either going to raise that much, or 1/3 of that much if Lori decides to use debt to finance the project, which would be about $6-7 million, something like that. Or we might even only have to raise about $3.5 million by the time some folks who have a right of first refusal for a big chunk of it participate. So we could be raising as little as $3.5 million or as much as $19 million. Either one of them are completely within the realm of completely plausible for a project of this type. All right. Let's see. Can I meet Lori Greymont and or other management team members? Well, I think you probably can. You probably ought to just go to that URL, set up an appointment with Lori, and then plan to come to the in-person information or introductory event, and you'll get to meet her and lots of other folks as well. So I think that's a great idea. All right, folks, that's all I got for you. Some of you out there already know that this is something that you need to take very seriously, and if that's you, go to the URL and set up an appointment with Lori. It's that simple. Now, by setting up an appointment, you are not committing to invest. You're still free to ask questions and get information. Similarly, by accepting your appointment to talk with you, Lori is not committing ahead of time to take your capital. That is a two-way decision on both your parts, and that happens only after the two of you have had a conversation. But I would encourage you to take action quickly, right away, if this is the direction that fits you. And this one makes some sense to me. And I suspect for those of you who have been around the block a time or two, it's going to be ringing some bells for you as well. So with that in mind, one final time, go to the URL you see on your screen right now, because we are done. My friends, thank you so much. I am Bryan Ellis with Accredited IQ Magazine. It has been a pleasure. Good night, everyone.